Hey, it's Mark Ferguson with Investor More. We're back with another real estate video, and today we're talking about the real estate market. Is it crashing? Is it going down? Or is the world not ending as a lot of people think? We're going to look at some of the data, a lot of it from Realtor.com, which has some really good weekly and monthly data, show you where we're at right now and historically, and I'll talk a little bit about my current properties and what we're seeing in our local market in Colorado as well. Now, we love the likes, love the shares, love the comments, keep those coming. Love seeing new subscribers as well. And my blog, investormore.com, has a ton of information on our rentals, flips, being an agent, and all kinds of advice there as well, and a free book. So make sure you check that out if you have not before. All right, so I am a real estate investor. I've completed 232 flips or something like that. Own about 30 some rental properties, ranging from a 900 square foot shop to single family homes to apartment buildings to where I'm at right now, a 68,000 square foot strip mall with my office, grocery store, and some other stuff in it. I've been an agent since 2003, so crazy to think it's been that long. And over the years, I've sold a lot of houses. I own my own office, my own broker now. But I used to sell foreclosures, so we sold close to 1,000 foreclosures and saw many different market trends over that time and saw a lot of different things happening in my career. So just giving you a little bit of background that I have a little bit of experience in real estate. All right, so what is happening now? I know there's a lot of videos and some YouTubers and people out there who've been saying the sky is falling for years. And now they're saying, well, it's actually happening now. And is that really happening? Well, it could be that the market is slowing down, and I would 100% agree with that. But the market was so crazy insane, it had to slow down at some point. I've been saying that for a long time, but I don't think it's crashing. I don't think we're seeing the bottom fall out. I don't think we're seeing the real estate world just getting blown up and destroyed. I think we're turning into more of a normal market, which is much healthier and where we should be. Now, you probably can't list your house, with a fire damaged garage and no roof and hope to sell it right away, right? You might go to a normal market where it takes more than half a day to sell it, and you might not get 10,000 or 100,000 over asking price, and you might have to put a sign in the yard. That's okay. That's what a normal market is like. So what does Realtor.com say about what is happening right now? All right, I made my picture smaller, so hopefully I'm not covering any of the text with it. But some of the key findings, and this is for ending August 27th, so basically last week is when this data is from. Median listing price 13% higher than last year, but it is actually lower than it was in June. It's $435 compared to $450. That is definitely lower. What's tricky with real estate, and I've said this a lot too, it doesn't just go in a straight line like this. It's not like a smooth, escalator going up. It's more like a mountain that kind of goes up and down and jigsaws, and it's not a steady line. So it's really hard to see a trend or say prices are down after 1 month or 2 months. You kind of have to see it months later to see those trends because they do zigzag their way up and down. So something else to consider is, and this is something I always forget every single year, I should remember, but August and September are our slowest months of the year every single year. I'm in Colorado. It's even slower than December in August and September because school's starting. No one wants to buy a house. It's really crazy how slow it gets. I always forget about that. And I think, hey, why aren't our houses selling? I'm like, oh, it's August. My kids are going back to school. I'm concentrating on that too. And our kids went to school really early this year as well. But that's something to consider. There's seasonal points, there's other points, and even Realtor.com, says this point right here too. A seasonal decline in prices is typical in our historical real estate data. They did say this month's dip is larger than normal, and higher mortgage rates could be taking a toll, but it is seasonal to see prices go up and down. They don't always just go up. And someone else told me I said that prices always go up, and I've never said that. Believe me, I went through the real estate crash where they went down significantly. But over time, over years and years and years, yes, they'll go up. But in between there, you have ups and downs, just like any market, the stock market, even the car market, all kinds of markets will have ups and downs. But given enough time, yes, they usually almost always go up, except for maybe like electronics and TVs, which tend to go down somehow. But all right. And this is something that's really interesting as well. New listings, a measure of sellers putting their homes up for sale, were again down 12%. And this is something else I had mentioned before. A lot of people say that higher interest rates automatically make prices drop. It's guaranteed. And that's not really the case. What happens, and this has happened in the past multiple times, in the 70s, the 80s, even the 1940s, well, that's more inflation, not interest rates, but the 70s and 80s, you saw higher interest rates and prices just kept going up. And the thing is, yes, the demand can decrease. Higher interest rates cause fewer people to be able to buy a house. They cause fewer people to want to buy a house. It gets more expensive. But that's just one side of the equation. You have demand and supply, not just demand. And on the supply side, sellers tend to not want to sell in a high interest rate environment as well. Because if I own a house and I'm moving up or for some reason I want a different house and I've got a low interest rate locked in, I don't want to trade that rate for one that's twice as high and get a worse house or pay so much more for my new house because the rate's high. I'm just going to stay put and not sell. And a lot of sellers have tons of equity. They have lots of flexibility. They don't have to sell their houses. And that is what we're seeing right now. Like active listings, we'll show you this, are going up, but new listings are going down. And that's something that is really affects supply and demand because we're already at super low inventory levels. And if we see fewer sellers list, it's going to be tough to really break back through to a normal market. Now we'll have less demand, so maybe those will even out. But to really have a real estate crash, you've got to have tons of inventory and very few buyers. And that's not something that we're seeing right now. And I doubt we will see that. I doubt we'll have a crash. Yes, the market could slow down. Prices could dip a little. If I had to make a prediction right now, and again, nobody has a crystal ball, I could see prices dipping a little bit and then going right back up again. Now, it's hard to say. You never know what the Fed's going to do if they go crazy and decide to raise rates, tons more than expected. That could hurt things. And that is new builds. And that's something else that happens when interest rates go up is builders stop building, right? They're very conservative. They got destroyed during the last crash. Any signs of weakness, and they're like, okay, we're done. We're going to stop building. And look at what's happening. We've had this steady, these are incredibly, just record lows. If we expand this out a little bit, you can kind of see how few, this is new privately owned housing starts, total units, so this is single family and multifamily. You can see how little building there was. And then we'll go back to here, and we'll zoom out a little bit. There we go. And you can kind of see it's been steadily, increasing. Then COVID hit, everything dropped like a rock. Builders got scared. They stopped building. Okay, things aren't so bad. We're doing better. Boom, interest rates hit. Boom, the bottom's falling out of it again. New builds are dropping significantly. So yes, there are, let's see here, a lot of houses currently under construction. If I can spell, I still don't think I did that right. There we go. We can see there's still a lot of houses under construction, and that has skyrocketed. Lots of apartments and different things going on. We'll show you here a different one. But look, that's leveling off. And under construction is tricky because they actually built more houses in 2005 and 2006, but they had less under construction because they could build them in 6 months, and now they build them in a year. So while we have so many under construction, not all of those are coming on the market right away. It will take a long time because supply chain constraints, all kinds of different issues are causing that. Now, if we look at single family, I'm on Fred, St. Louis data. Oh, I cannot spell. There we go. This is a little different picture. You can see they still built way more homes before. And then we had an increase in single family homes under construction. Again, not all of it, but a lot of that is caused by the time to build. You can see as soon as COVID hit, supply chain issues, the time to build just increased so much. So while we have all these houses for sale, it's taking them much longer to build them, which probably is also freaking out builders because they want to get them done quickly so they can avoid any future issues. But you can see that is decreasing as well too. So while we might have a lot of inventory of new houses right now, building starts are way down. Homes under construction are starting to slow down. listings, regular listings are down. In a few months, in 2023, we could see another inventory problem where there just aren't enough houses for people. Will prices keep going up? It's hard to say. It's hard to know. But every other decade that had lots and lots of inflation saw prices keep going up higher and higher. So again, maybe they won't go up. Maybe they'll steady out. Maybe they'll drop a little bit. I see a crash as being very, very unlikely. But my best case, or not my best case, my best guess is we see things slow down, maybe towards the end of the year, depending on what the Fed does with rates. And then we're going to get into this inventory crunch again, and people are going to be like, they're kind of waiting right now, waiting for prices to drop. And it might get to a point where they say, well, maybe prices aren't going to drop that much. Maybe we need to buy, we can't just keep waiting along. But again, people are still buying, and we'll show you that here, just not as much as they were. Again, active inventory did go up. So 26% above 1 year ago, but we'll show you that data, which is a crazy graph on why that isn't as significant as you might think it is. Homes spent 5 extra days in the market compared to last year. 5. Not 5 total, but 5 extra days. And so we'll show you that graph here too. But Realtor.com has lots of interesting data, shows us all kinds of cool stuff. And the really cool stuff here is in the graphs. Now, this is the July monthly housing market trends report. We don't have August yet, but this is very interesting. So they have lots of cool graphs here. Active listing count. This is how many homes are actively for sale. You can see we have more than last year. Yes. But look at this. This is 2020, 2019, 2018, 2017. And these were good years for real estate, right? These weren't down years. We're selling plenty of houses. Our prices were going up in Colorado, maybe not, maybe more than other areas. But look at that. We still have like half, just a little bit more than half the listings that we had in those regular normal years. Still more than 2020, although you can see what happened there. 2021 was just an insane, crazy year. If we had years like that forever, prices would just keep going up at insane rates. So it's a good thing that we're above what 2021 is. Now, keep going down. Total listings. These are all the listings together. Active are ones that are for sale, not under contract. And then total listings, these are ones that are under contract as well. And you can see that's a little lower. Again, way, way below every other year except for 2021. And then keep going here. Pending listing count. These are homes that are on the market but under contract, which means the buyer says, I want this house. We have a contract accepted. We're just going through the escrow process. And here, that has been decreasing. Now you can see what they said before, the seasonality. Decreased, decreased, decreased every single year except for 2020, which was a weird year. Like everyone decided to buy houses when they were locked inside. So kind of strange. But you can see it's decreasing maybe slightly more than other years. So people buy less houses when interest rates are up. True. Never have said otherwise. But we're still at a low inventory level. Now, going back down here, newly listed homes, this is one we were talking about before, decrease here. And then I think as we saw in the more current weekly trend, this is continuing to decrease. And yes, other years they decrease as well this time of year. But this certainly looks like the sharpest decrease we've had in the last 5 years or so on newly listed properties. It'll be interesting to see if that levels out a little bit or if it keeps dropping like it did before. So again, lots of cool graphs. I think, this is an important one. Days on market. This is, remember, went up 5. Went up 5 days for market. Still, look at this. 35 days. Even 2021 had more, took longer to sell. Did I say 25? I meant 35. Can't remember. In these other years, twice as many days to sell. Maybe not quite, real close. I think everybody kind of forgot what a normal market is. A normal market is not 2021 or even 2020. It takes longer than a day to sell your house in a normal market. And yes, we are going back to that here. All right, median listing price, you can see $449, and that newer one said it's dropped a little bit here. And then you can kind of see here too. Look at this, except for 2020, which was crazy, but even 2021 saw a drop. That's more steady. But again, look at how high up we are here. So it is not like we're seeing significant drops. A little bit. And what else is interesting too is I looked at this in my local market data. Our median prices also dropped, but our price per square foot did not. It was kind of like less really expensive houses are selling, but more affordable houses are selling. And so that dropped the median price, but the price per square foot was still increasing slightly or right at steady. So it's not like prices are really dropping. It's just there's more of the lower priced homes selling, if that makes sense. All right, price reduced share. Again, way more price reductions than we have seen in other years. 100% agree with that. And part of that is, yes, people wanting to sell houses and people asking too much for houses. It's really hard to say. Price reductions are one of my least favorite stats to track because it can mean so many things. It has so many variables. And you don't know if it's because people price their homes too fast or too high. They got greedy. In a crazy market like we've had, people just kept going up, up, up. I did it too, right? Why not get as much money as you can? And then you realize, wait, maybe I pushed it a little too high, right? Maybe I'm jumping the gun here. Let's come back to earth to where our prices should be. So we'll see if this keeps going up or if it kind of steadies out here. You can see the other increases there, but definitely not as high as we've had this year. So we'll see where that goes. And then is that, okay, that's all that data. So what's going to happen? Our houses, I've got some weird stuff for sale right now, and it has definitely taken longer to sell than it has been the last year or two. Now, we've also got like the college rental that's not rented, and we thought maybe we could sell it as single family, and it's taking a little longer to sell, and it's not a good time to sell a college rental. I'm thinking about maybe we should get it rented, then try to sell it that way. Some other things, that are taking a little longer to sell. But then on the other hand, I have a mixed use property that's half rented, half commercial space that went under contract, which I thought would have been my hardest property to sell and was actually for sale for a very long time, for sale for months because it's a very unique property, takes unique financing. But we found the right buyer. They jumped on it, and looks like that will be going through. So it's funny in this market where what should have been my hardest property to sell is under contract and selling. But some of the other stuff, it's still a little weird, but it's taking longer to sell. Stuff is still selling though. Our market is still seeing properties go under contract. And, I'm always buying deals. I'm still looking to get good deals on stuff. And there have been a few good deals pop up, but it's not like we're seeing a big, massive increase in deals in our area either, right? There's not this influx of really cheap properties that you want to buy up, try to flip, get a good deal on. There's been some, but they need a lot of work or there's something weird about them. And I've been trying to avoid those properties lately. If you watch my channel, I have a lot of drama. And so I'm like, in a normal market, I still don't think, or even in a crazy market, I'm like, I still don't think I would want to buy that now. I'm like, there aren't that great of deals. I did make an offer yesterday on a very unique property. I don't think we'll be getting that because they stuck to their price and they didn't want to negotiate at all. And I needed to get a little cheaper, but I'm still on the lookout, but I'm still not seeing crazy deals out there yet either. And that's that might be one sign of the market really getting shaky and dropping is when you see lots and lots of crazy deals. Not seeing those either. So you can make money in any market, right? Up, down, steady. It's all about getting those great deals, and we always focus on getting the great deals. So if the market does adjust a little bit, you're okay. If it goes up, you're great. If it stays steady, you're okay. And so far, it's worked out well. And then, we are looking to get good deals. They pop up. Just haven't seen anything really that amazing lately. All right, that's my synopsis of the market. Like I said, I don't have a crystal ball. I can't say for sure what will happen. My best guess is we could see it slow down, maybe slow down a little bit more. We could see a little bit of price decreases, but I think we're going to see another inventory crunch if they keep interest rates high. Building's going to keep dropping, listings are going to keep dropping, and all of a sudden people are like, where are all the houses for sale? Like I thought, where are these good deals they promised me would come up? And eventually people are going to be like, well, maybe these good deals aren't going to come. I kind of saw that happen in 2012 where there were good deals all the time and people, were used to those good deals and really amazing prices after the crash. And then our inventory shrunk, right? The foreclosure rates dropped, inventory shrunk, and people hesitated for a long time. and prices kind of stayed steady. And then all of a sudden, people kind of realized, all right, they're not going back down again. We're not getting those crazy good deals we had before. And then we saw the increase in prices where people kind of had that emotional realization that the amazing deals were gone. And they had to pay a little bit more, which looking on it now, we're still absolutely amazing deals. But at the time, it was a scary time to buy after having that huge crash. All right. That's all I've got for today. Love to know what you think. Love to hear how your market's doing. We'll have many more videos coming up here, not just of housing data, but walkthroughs of my flips, my rentals, commercial properties, businesses, all that good stuff as well. And of course, there'll probably be some drama based on the properties I buy and things we have going on, but we do try to limit that. So, all right, take care. We'll be back.